Welcome back. After that short break, you're watching DD India News Hour, and now it's time to get you all the latest from the world of business. Now, the US Central Bank has cut interest rates by 25 basis points for a third time, despite concerns that the move will deliver a boost to the economy that risks inflation. The Fed cut rates by 25 basis points to the 4.25% to 4.5% range, and its summary of economic projections indicated it will make rate cuts totaling a half percentage point by the end of 2025. The Fed's 19 policymakers projected that they will cut their benchmark rate by a quarter point just twice in 2025, down from their previous estimate in September of 4 rate cuts. Now, US central bankers now project they will make just 2/4 percentage points rate reductions by the end of 2025. That is half a percentage point less in policy easing next year than officials anticipated as of September. US Federal Reserve Chair Jerome Powell highlighted a cautious outlook at his post-meeting news conference after the rate cut.
The outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. The U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
And now to get us the latest on this, I'm joined by DD India correspondent Amit Mukherjee. Good morning, Amit. Now, the US Federal Reserve cuts key rate interest by 0.25%. How can this make an impact on daily lives, Amit?
Well, Deepika, one must understand that these spate of rate cuts, the 3 rate cuts which have been affected by the Fed since September, has come after a long period. In fact, 14 months. If you look at the past between 2022 March and 2023 July, the Fed had actually increased the lending rate in 11 occasions. So after that, and it remained at that level between July 23rd till September 2024. So in a way, this is basically to boost the economy, and this rate hike was affected because US was witnessing the worst, in fact, sort of a inflation, a recessionary trend in the last 40 years. To overcome that, all these rate hikes were actually affected so that, the liquidity could be squeezed out of the market and inflation could be controlled. But still, the inflation remains on a higher side because, the target is of 2%, but and you rightly pointed out, it has been pegged at 2.5% in 2025. But definitely, this rate cut is going to boost the economy in terms of consumers will have more leeway to kind of borrow money and spend in schemes like housing, and also they can spend on luxury items which they have not been doing for the past 2 years or more, since the COVID had actually happened. So in a way, this will be boosting the economy, but again, it's a very, very calculated risk which Powell has taken right now because all the parameters are not correct. In fact, inflation still continues to be it's uncontrollable slightly because it continues to be on the higher side. And also, the other thing which probably has triggered this rate cut is also a good employability figure which we are seeing in the US market right now, because more and more people are getting employed and the rate of unemployability has decreased significantly. Because so we are looking at basically some way the US is looking at to boost the economy because it has been struggling for the last 2 years, which probably has not been highlighted in a big way.
Also, Fed Chair Powell said that the US economy has been remarkable in his speech. And further, if we talk about it, 2 more rate cuts are being indicated for the upcoming year, 2025. Get us a sense of how the political parties are reacting to this slow growth.
Well, Deepika, again, another thing one needs to understand that as the Biden administration is going out just to make a feel-good factor, this kind of a rate slash has been affected. And, as you know, that Trump, the president-elect right now, will be taking over from January 20th. But again, like I said, it's a very, very calculated risk which Powell has taken, despite the fact that inflation is not totally under control. Of course, he says that, U.S. remains isolated from the geopolitics, which is, and the unrest which are happening in different pockets of the world, which may not be entirely true. And one has to see what kind of a policy change the new administration, the Trump administration, makes once he comes into power. So he'll be keeping a very close watch, very little headroom. In fact, we may not even see the 2 rate slashes which he's talking about in the next year. In fact, that also reflected on the sentiments of the market, which plummeted drastically yesterday.
Okay, thank you so much, Amit, for joining us and bringing us the latest information on US federal rate cuts. Moving on, India has become the third largest exporter of smartphones